first-hand contact with brokers and planners. What are you seeing on the ground at the moment? What are the forces that are really driving, what are the changes you're seeing in the businesses you're dealing with?
Lisa and I have spoken for the last couple of years around convergence, and in our earlier tenure in terms of bringing that concept to life, we received a lot of resistance. It's a distraction to the traditional model. Brokers can't make good planners can't make good brokers. They're quite different, and, each to their own. There's different business models for different people. But we always fundamentally believed in the converged model, not so much for the business but for the benefit of the consumer. We're now starting to see a lot more of the community start to take notice, and I think what has driven that is that they've been able to see people such as yourself that have made it work, that have said, you know what, my business does need to evolve, I do need to diversify, I do need to protect my current customer batch but also bring in some new ones. So there's a lot of people now that are lining up. But I think those that, again, put the customer first are the ones that are really succeeding. Those that are using the limited opportunities that you do have with your customers as key moments of truth to talk to them about their total financial. So not just to talk to the customer about the mortgage. At that time, you're looking at that statement of advice. You can talk mortgage, superannuation, insurance, and really work with the customer and let them know that, yes, whilst your trigger point is the mortgage, I will be with you during your financial life cycle. And what you're finding is that the kids are starting to come into the practice in terms of the customer base as well. So they're moving generations, which is another important step.
Jeremy, because you were so successful in the broking area, was there a temptation to stay in broking and not move to a what can be a more complicated model?
It's been more than 5 years that we've kind of been kind of toying in the space of financial planning, but it's always been referring out, and then I guess over the years we've tried different models of referring out, having someone employed salary based in the office, having someone kind of working as we've got now under a JV model, but I don't think it was the focus wasn't necessarily on a remuneration outcome. It was more just obviously providing these additional services to the client to make them stickier, and there's no question there's a duty of care. So even I think that's obviously moving forward, I think it's going to be a bigger space from a duty of care perspective. Obviously, with anyone taking out a home loan, I'm still surprised to this day that the banks don't have any requirement for anyone taking out a home loan to have something signed off to confirm that they're adequately covered. I see there's an opportunity there for banks to do so, but obviously, happy for us to be taking on that responsibility ourselves. But there's definitely a responsibility, and we've brought that into our process now over the last couple of years, that we are ensuring that clients are adequately covered, and if they're not, then obviously they're going to, provide something to us to confirm that they are, I guess covered elsewhere. But yeah, so I think more than I guess the broking business, the mortgage broking business, is our core business, and it still is. But certainly, no longer do we want to be referring clients out elsewhere, especially given that we're seeing more brokers becoming financial planners and more financial planners becoming mortgage brokers. So I think we need to all protect our own clients, and obviously offering it in-house is the way that's worked for us.
Talking about customer, Anita, how do you create sticky customers in your business?
One of the things I took out of my time in financial planning was the annual review process. Whilst we don't do an annual review proactively, it's like what Mark's saying, trying to get around to everybody. One of the things I now say to all my clients is that if you ring me at any time and you want to do a pulse check, I'll always make time to meet with you. If you take 1 hour out of your whole year to review what you're doing and for us to set up maybe a better way to do it, I'll always make the time with you. And so now in my calendar, I probably, not consistently, but at least every couple of weeks, I'm doing someone who's an existing customer who I'm not getting any, I'm not getting a new loan out of it. At the end of the day, I think we're being paid a trail to look after that customer. So I think that's a responsibility that I always tell my customers. I take that seriously. I'm paid to look after you, so I make the time for us to meet. What comes out of that process and out of that meeting is effectively, and this is where our business has actually done really well lately, is how people really just want someone to talk over how they're structuring their accounts. You know, okay, what we tend to do is because I come from a marketing background, I look at what their current behaviour is and how they are setting up their accounts and how they're working their money. And then I think, well, okay, that means that, you know, that does lend itself to an offset account, but just remember, now what I say to them is your offset account just takes the place of, say, you know, your savings maximiser or the big account you used to save in. And they go, oh, okay, I get it. That sort of value add has created the ongoing relationships, and we really have turned those clients into more than just a one-off transaction and just a one-off client, so that they know, okay, well, the rate's coming up for review now, or, you know, they'll ring me first and we'll have a catch-up and work out what to do next.
Sebastian, you mentioned before about the idea of an academy, which brought up the whole issue of recruitment of staff, retention of staff, which you referred to as, you know, in terms of loyalty and retention. And training of staff. Can you just elaborate a bit on what you're thinking there?
We looked at the market and we said there's an opportunity for us. We have an intimate knowledge of online customer acquisition, and we have the ability to generate not just a lead, but actually a qualified, bona fide opportunity for someone to go and see. So we're looking at this with sort of, I guess, two pools of talent. One pool is the new entrant, and we're looking at them and saying, well, what scares someone about this industry? If I'm looking at this, I've finished my university, whatever it may be, I'm looking for a sea change, I was a real estate agent, etc., etc., etc. Well, I've either got to join a franchise, or if I join one of the aggregators, the risk is I go 3, 4, 5 months without my first commission check. Well, it's not a risk, it's a reality. And not everyone can afford that luxury. You know, do I have the ability to generate referral business? You know, I'm going to see an accountant or a real estate agent, and he's already got 6 other mortgage brokers that are knocking on his door every week. So what we're looking for is to build a platform that A, provides an offering, which means we can actually give them business that they can start seeing. But B, and I think this is most important, provides them with full structure, support, training. We want to take people and put them through their diplomas. We're talking to a number of the people who are doing the mentoring courses at the moment. So we want to have an in-house mentoring program that enables someone to come and join our business, be mentored for 2 years, get their diplomas, but most importantly, start seeing business from day one and not have to wait that 2 months to start warming up their referral partners. And on the flip side of that coin is incredibly talented people who have all of this idle or excess capacity in their day who are currently in the industry. They might have referrers, they might have, and I'm talking more to the one-man bands, that, you know, are giving them enough business. And there's a lot of people that are incredibly busy and do very well, but there's also a huge amount of people that might only be at 50 or 60% capacity, or that they're spending 80% of their time trying to generate new business when they're actually a very talented loan writer and they can offer customers incredible advice and they have the ability to really assist customers. So what we're looking to do is A, plug customers into their idle or excess capacity, but B, offer them a platform where they can work with their current customers and also in their downtime or in the time they used to prospect new business can see our customers. So those are the kind of 2 areas that we're looking at. I think there's an incredibly important piece to be said about the new entrants. And I think if we can really nail that academy piece where you're brought in, you're not just given a license and given some training and said, now you can go and write loans. It's actually holding their hand for that first 2 years and providing them with the customers to cut their teeth on. And by the time they finish that, you know, I think we'll be able to have a much higher retention of new entrant mortgage brokers through our process than potentially some of the traditional models.
I know, Lisa, you were talking about one of the big themes being the ageing population, and you raise that as an opportunity, but also there's a threat involved in that ageing population in terms of the average age of planners and brokers getting older and replacement of staff. From your position in the bank, how do you cope with that in terms of servicing the distribution channel, and if you like, assisting that channel in coping with that sort of change?
I think distribution and manufacturers have to reflect the demographic of the customer. So I think that augurs well. If our customer base is ageing, then you certainly need people who are servicing at all parts of the value chain, servicing those customers who can empathise and relate to the changing needs of the evolving customer base. So while I think we certainly need to address how we encourage younger players, because that's our pipeline, to come into the industry servicing this incredibly fertile financial services industry. I don't think we should be quick to march off the ageing distributors either, because our population is ageing, and there's a lot of people like to emulate the service provider to customer.
Mark, just on the similar theme, you were talking about the problems with holding retaining staff. What do you do, or what can you do? And I suppose that's partially you've downsized, but was that because of staff, or was that for other reasons?
Never really had a problem in retaining staff, but what I was probably trying to lead to is that when you do let staff go or you lose staff, and we had some for 10 or 12 years, they're going to build up a fairly good relationship with your client base that you've built up. So whilst I'm managing staff, I'm referring my clients to other brokers, and when they leave, they tend to take a bit of, you do lose a bit of it, and that's just the way it is. You can have whatever you like in an agreement, but unless you're prepared to take it to a challenging situation in court, you probably you'd need to spend a fair bit of money, and there's a couple of cases right now that I'm quite interested in. But look, it's actually not that hard. I think this is a great industry for people to get into, and people will stay with you for 6 or 8 years, especially if you're paying them a trail, which we were doing. But eventually they're going to go off and do it themselves because they feel they can do it, and they're probably going to take some of your staff. And I think some of your clients, and I think that's the big thing. I've gone a slightly different way now with bringing my son into the business. It's interesting talking about age. He's only 19, he loves it, works very, very, very hard, but would rather work at the other end of the day. But he's already wanting to go out and see clients. I mean, he's not in that position. He hasn't been trained enough. But I'm saying to him, mate, you're probably 5 years away from being able to do that, because Sebastian's talking about training people. I'm not sure that a 19-year-old or a 20-year-old going and seeing somebody and talking about one of the biggest things they're going to be doing in their life is probably going to cut it. So
if I was sat in front of someone who I didn't deem to be qualified, regardless of their physical qualification, but just by the pure age, I think I'd find it hard to take advice. And I'm quite young myself, so I'm probably looking at this through slightly the wrong lens. But that is certainly something that we have, and we have people coming and wanting to join the business, and as you rightly stated, look, it might just be a bit too young to be client facing, but I think there's a great opportunity to get them involved, and over time.
The other big issue that you raised, Daniel, is compliance and the march towards greater compliance. It seems inevitable. Obviously, it's an issue for your business. How are you, one question, how are you coping with it? And is it getting better? Or are you making it better?
The idea with financial planning is to review clients. So I just find that if I'm doing the right thing by the client and I'm providing them good advice, so I'm talking about their wills, I'm talking about estate planning, I'm talking about insurances, about investment, about super, about retirement, about buying a house, about investment properties, the whole thing just falls in nicely. The other issue is there's two businesses. So I've got two licenses, one for mortgages, for loans, and one for financial planning. So I've got 2 different hats. So that's something you've got to be very clear about too. When you change hats, you're going through 2 different licences, and then you've got 2 different fact finds and twice as much paperwork.
So that the compliance is protecting the client and it's also protecting us. Let's not forget that as well. So it's I find that some of the questions in the compliance documents stimulate more conversation than they didn't necessarily want to have initially, but then realise, oh yeah, I don't have income protection, I've got no way of protecting this loan, or wherever the conversation goes. So, but particularly in financial planning, I think it's essential that we as an advisors protect ourselves and make it very clear what has been said, should something happen in the future. So it's a two-way street, I think. So there is definitely benefits.